Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Ryan McCormack, Factor and Core Equity Strategist at Invesco, to discuss weekly performance in the Nasdaq-100 and key data that investors should be aware of coming up. Ryan, it's great to see you as always. Welcome back to Trade Talks. And again, another strong performance out of the index last week.
Hey, Jill, it's great to be here. And yeah, just flat out a strong week of performance. We saw QQQM and QQQ advance by 2.07%, beating the S&P 500 index's total return of 0.99% and the S&P 500 value index's total return of 0.26%. Really, when we look back, Thursday and Friday's trading action accounted for all of the week's positive performance in the Nasdaq 100 index and its tracking products, as they were trading lower for the week at the time of Wednesday's close. Friday also marked a new all-time high for the Nasdaq 100, along with QQQ and QQQM. And today we saw the Nasdaq 100 trading lower for most of the day until about 20 minutes ago, where we were hovering right around flat. So yet to be seen if we see another all-time high close today.
And Ryan, if we take a look at weekly attribution, what sectors are delivering the performance or outperforming?
Yeah, so technology was the largest contributor to relative outperformance against SPY, the S&P 500 proxy. It's QQQ's largest overweight sector, outperformed its counterpart in SPY by 75 basis points. We saw large contributions from semiconductor names like Broadcom, which is the largest relative overweight stock in QQQ versus SPY or the S&P 500 index. It was up nearly 8% for the week. And then we saw, names like AMD and Marvell Tech each up by over 14% for the week. Micron up over 10%. Healthcare also helped relative performance. The sector was barely higher in QQQ, while its counterpart in SPY was down over 1% for the week. Industrials dragged on relative performance. The sector was one of two that were in negative territory for the week for QQQ. It was down 0.11%, as its counterpart in SPY was up over or just slightly over 1%. But this week we're watching for March 7th, which is Thursday. Again, we have Broadcom, that largest relative overweight. It's reporting earnings after the bell, along with Marvell Tech reporting after the bell.
Yeah, Ryan, it's interesting to hear that industrials and healthcare were underperforming, because strategists that we have coming on the show, and I'm sure you've heard it as well, they're starting to think about opportunities outside of tech, moving into healthcare and industrial. So I'm curious to see when we'll start to see that turnaround. Let's talk about PCE here for a moment. What's discernible about that data? Because the economic data continues to be strong as well.
Yeah, so I think when we look at last week, we had Wednesday was the second release of Q4 GDP, right? It showed a 3.2% annualized growth rate quarter over quarter, slightly below through the 3.3% that was reported in the preliminary reading. But on Thursday, we saw the release of the January PCE deflator. That met expectations on both a month over month and year over year basis, 0.3% on the month over month, 2.4% year over year. But then the Fed's preferred gauge of inflation, which is the core PCE deflator, which is ex food and energy, it was reported and moved lower on a year-over-year basis. So it went to 2.8% year-over-year from 2.9% in December. But the month-over-month figure increased to 0.4% from a revised lower 0.1% in December. So this represents the largest increase in the month-over-month core reading since January of 2023. And you can see in the chart, which plots both the month-over-month and the year-over-year core PCE figures for the past 4 years. The year-over-year figure, which is that blue line, it's been in a pretty decisive downtrend since its peak in the summer of 2022. And that's despite a handful of spikes that we've seen in the month-over-month figure, that would be the white line, since that same time frame in the summer of 2022. I think ultimately the year-over-year and month-over-month readings were in line with economist expectations. And despite the acceleration that we saw in the month-over-month figure, market expectations for a rate cut remain at a roughly 20% chance of a cut by the May meeting and a roughly 80% chance of a cut by the June meeting. But then this week, we'll get some more attention around the Fed, specifically when Chairman Jerome Powell will testify in front of Congress. That's on Wednesday and Thursday.
All right, Ryan, appreciate the insight. As always, thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.